Hey. I have no idea what I'm doing. This thing appears to be live streaming. Not too sure if it is. How would I figure that out? Let's see. Content. Live. Hey. I think that's us there. Click on that one. View live in control room. Oh, this is different. Oh, if there's anyone actually watching this, I'm just playing with this live stream thing. First time. Save views. Oh, people are jumping on. You can see these little numbers popping up. Let's go. That's kind of cool. What do we got on the screen? Total. Well, they basically have 20 minutes to unscrew this thing. So it looks like they're aiming to try and create hold levels for the rejection. It could they could pull that up a bit, create a wick and some kind of trend, but it's looking pretty nasty. They're doing BTC, yeah, BTC daily hold level. Yeah, that's not in a position to break the downtrend anymore. They'd really have to push that back up if they wanted to be able to open on the right side and bounce. So that's pretty. Yeah, I think so, or it could just be setting the stage for another flush. Still watching the main video. Yeah, that's a nasty rejection. So this is back down underneath support. I mean, it is still possible that it just ends up stuck in a range just in that area there. Because if they close here, it can just reject and bounce between these two levels. But it is somewhat helpful because it will move the trend. So if that does close blue, then yeah, this trend that's coming up here will shift to be under here, and the only way it can really do that is actually to be under that support. So might create a tiny little wedge like that, in which case it can break. Either way, really, off to the upside or break to the downside, one or the other. What else we got going on? That's still absolutely teasing, aren't they? So holding that bottom level, but just kind of hovering around that 108 level. That's not ideal. So we're still just above. Sometimes this is all just theatre. Yeah, it's like make it look really, really bad just before daily close so that people assume it's going to dump and they all open shorts and then sure enough it goes the other way. Hello. But it would be definitely a little bit nicer if they would pull back up into that before the end of the day. Otherwise it's just another thing to be stuck in there. They can also actually just reject off these too, which is, this is not the kind of hold level that we talk about when it comes to taking fib trays, but this candle here is actually a hold level. So it's that, all that. So if this is just a little bit of a fakie before we open the next candles, then you'd sort of want to see it pulling back up into that area and then bounce. Good chance of hitting 106. Yeah, very much. Well, thank you. I'll hit the like. Can I hit the like on that? I don't know what I'm doing. I hit the love heart. There you go. I think some of the really big stuff that's in play does have 100k sub 100k targets, and it's just a case of is it worth going there? Looking at the short term liquidity, it would be we've all seen this kind of thing. Did that screen just change to a liquidity map? I don't think it did it? Or is there a delay? No, okay. I need to figure out how this YouTube streamy thingy works. I think it just, oh, no, it did just move. I think there's a delay. All of this stuff, to the downside, you can pretty much just see some kind of massive wick coming straight through that, and that'd just be a double bottom if it went down to 103. Now it's popping up. Okay. Yep, just on that line. That's not really ideal either. So that 109.302 level could reject. Even if it pumped back up to that trend, the trend could reject. And this probably won't support it. But this could down here. So it's like 101. Doing these daily 5. Yeah, I mean, I think like a lot of the big moves, obviously, yeah, you can make bigger money off, but if you just look at the power of just adding 1% to your portfolio every day, even if it's just on one small leverage move, it becomes a pretty big number pretty fast. Hello. Good day. I don't know what the delay is on this. I should put Someone post in the chat what the time is. Oh, you can't see the time on the screen, can you? Yes, you can. Down in the bottom corner of the chart there. Someone just chuck in the chat what time they see when they hear me say this. Yeah, squeezing. This is it's pretty much the story of the price action for a while now. As it moves to a level, it sits there, it holds there, it just builds liquidity top and bottom, and then it creates some kind of range, and then it just squeezes until it breaks, and then like what we saw yesterday was a break out to the upside, which gave Sol that pump from the 180, those sort of low 180 levels up to the mid 190s. 9 minutes till close. Okay, it's not too bad. It's about a minute delayed. Thank you. Yeah, so 7 minutes, eh? And in 7 odd minutes time, it can pretty much either just pull back up about above that level or stay below it. It's just right on the line. And that's below the wick, so that's not good. So there'd be multiple areas where that could reject. Look at them tease us, eh? Just $10 up and down. Oh, down. Yeah, this time frame is probably the one that's got the biggest, cleanest dump. So if it loses this level, then that's not actually a very good support level, that 106. It's a break level, but it was never challenged and then lost and then gained. So it's not as strong as what that level is, which was created, challenged, lost. But when it was gained, it becomes support and leads to a higher high. So that's a better level. That's a weaker level. Price can just pretty much go straight through that if it wants to. This is an untested level. So that 98, it can create either of these scenarios. So it can either become a strong support level, but it takes first one candle's got to hit it, then it's got to move back up, and then the next one's got to not be able to get to it, and then the next one hits it and verifies it as a strong support level, which is like up here. You've got level was created, it was challenged, price was not able to get back to it, so this is now a very strong rejection level. So at this stage, this is effectively the top of the range, and this is the bottom of the range. And if it can hold the bottom of the range, then it'll challenge the top of the range. And that's kind of why it's not really a bear market yet. But if it loses the bottom of the range, then it has to create a new bottom of the range, and really can't do that unless it's 98 or somewhere below 90. Same with this level here, so it was challenged, it was lost, so that's not a strong level. And because this moved up so quickly, there's nothing else over here to the left, so it's got to be something in there. And worst case scenario, it's got things like this range trend here, which all the way down here in the 80s. So yeah, it's a little bit of a troublesome time frame if that one loses its level. Just up inside. Yeah. Nope, just down below. Funny thing is, Sol actually doesn't look that bad. Relative strength wise, this is in a much better place. Because that'll just shift that trend to the bottom. Enough of a wick on there that it'll still be above the trend, but still above the really steep sloping range trend. And it's inside the whole candle, so it's not. So I guess it's hard closing under this. So that's that would sort of be your first touch rejection possibility at 190.753, and then back to good old 175 as a support area. But it doesn't actually look that bad. And then if it loses 175, the next point on the daily is actually more like this 166 rather than 170. So we have got a short in play that will play out at some point, taking it to 170, but the target for a short isn't necessarily always going to be support. So sometimes the targets are prior to the actual support. That would be the next level in this one. And then the numbers start to get quite small after that. Just that one there. 157, so that could bounce. That's what created that whole range there. So, and got hit here, created all that. It's pretty easy to see sort of how price can move down if they push this down, close it. Oh, here we go. Hey, daily close. How do we close? Oof, alerts. How's that for a lot of alerts? That's what we do. Monday created holds. Trend breaks and moves. Yep. Look at that. Yeah, so we've got a hold level in there at 187.9 on the daily. I think that actually closed. Did too. It closed inside support, so it's just bouncing straight off that support at the moment. So it'll be interesting to see if that actually pushes it back up to here, or the trend. Little quick $2 move. I think I might get that. Yep. That's actually got confluence with a 4-hour move that's already in play. Okay. Now Bitcoin go. Ugh. Yep, that's a pretty average close. So it stayed above the 107,400 level, which is something. So now we're just going to be compressed in that area, basically. So it's either this hold level is going to break the trend, down it goes, or this trend's going to have to try and break that horizontal level again and that. So Sol actually is much stronger. Yeah, just on the really short term, it'll just be up to 187.8-ish, I think, which is already going to be in motion now. So this probably travel up to here. See if that, and there's a little bit of 100x leverage from people that chased the dump, which came in at about 187.4. Yeah, correct. That's the tough part, isn't it? You've got BTC that seems to just want to fall off a cliff, but Sol that actually really looks like it wants to go up. Things can do that. They can go in opposite directions. It's kind of how rotation works, but it's just not very common. I mean, look at Zcash. Didn't really matter what BTC was doing. Zcash went up. Hey, 22 people watching. Okay, let's have a look at these other closes. Yep, so 2-day may just move between the trend and that 190.7 level. So it could pop back to the trend and then back up to there again. Or we travel up first and down. There's also very faintly, there's the prior broken trend, which is just coming through there as well. So that could retest that. They can recapture those too, but you're not going to know that for a couple of days. So that's new. So we're still up inside the range trend. So it hasn't really lost all hope of bouncing off those 180s yet. It's still holding that. And then we go to this one. Yeah, that's bearish. So close under the range trend. So that could definitely go to the 170s. And this is actually back inside. So this range from, well, this whole candle from the 15th of January back here, this one wants to target 120, and 120 could be considered the bottom of the range as well. Just that level right there. There's a lot of confluence between that. So you've got just your basic fib 1618, which is 120.659. And then you've got your bottom of the range down here at 120.487. So that would be a pretty sizable dump. Yeah, some other blockchain announced they're shutting down their organization or something this week as well. So it's like seems to be lots of capitulation. Uh, for this 7-day time frame to get down here though, it really needs to have some kind of major um, I don't know, event type dive, because it would have to get through this range trend, which is like 176. And that's one of those little suspicious gaps there where it didn't quite touch it last time. So even if it came down here to this range trend and then bounced, it could bounce all the way up to 200 just purely by touching that. Could happen in reverse too, actually. So if it goes up and hits anything in here between 200 and 204, that could then create the rejection back to this. And then if it could stay under this, open the next candle in 7 days, it could dump down further. But that also hasn't touched up there either. This whole time frame is just dodgy. If it went up and did its first touch rejection of that trend, it would be in the 220s, and that would be 270s. Thank you. I guess we see in the next 7 days. The cool thing about stuff like this is you sort of know that if the price goes down and stays down and opens on the wrong side of that range trend, then overall they're working their way towards something, and that something is probably going to be a very low target. And of course, if they go up, do the same thing and hover around up here, they're going to open on top and going to try to push through. Then you know that they're going to be trying to come to this. Yeah. I don't even know what that blockchain really was. I guess it's just one of probably thousands of them that are out there. And let's see, 14-day. So 188.786. 188 is the hold level on the daily. Hello. Yeah, this is kind of how my brain works is I see this daily level and I go, what is it? It's 188. And then you start looking through and checking out what are these other levels. Well, you've got I could pull back down here. I could go back up here, so that's like 190 point something. And then what have I got? I've got some trend support around the 184s. And then I start looking at these levels and going, okay, well, what could I reject off? And that's a pretty old level there, 187 to 188. And as you sort of start going through, eventually you find that there's just confluence in the different levels. And you get something like this and you go, okay, that's a big drop. And it could start simply by rejecting off that 188. Or often what they do with a lot of these higher time frames, because higher time frames need more liquidity to take. It's bigger money. So if it's not always the case that it's going to reject straight off that level, what they might do is push up a bit higher or into it, even spend a bit of time up in there. And then, once everybody feels like they're very safe, it starts to roll over. And it's usually as it gets towards the end of the candle. So it might be a couple of weeks from now and it starts to roll over and then starts to pull down underneath. And then it's often after it closes underneath and then hits it that second time, which that's the hard close and then down it goes. But that's a pretty critical level. And that might still be trying to push up. 77s. Yeah, 177s, 175s, 174s. It's kind of all around this number. That's a lot of confidence in that. This is interesting because it didn't create a hold level, but also didn't open in a position to be able to break the trend. So it's kind of a real hard one to figure out what they're up to there. Yeah, that's an even bigger time frame. So this created a new trend today. Actually kind of bullish. Like it's arrayed upwards. So instead of this candle actually coming down and touching the original trend or going through it, it actually ended up moving upwards slightly. So now you've got this high time frame level here. It could tap into that, so that's that 188, and then it could come back down to the 150s. Or it could come up here and try to push into that trend. Yeah, and it's just a bit. This is the, I think, second or third day in a row now where they haven't let that close over 189.270, because that would become a backside hold if it had closed up here. Yep. So that's also just reinforced that this level up the top here at 259. So there's your break of range. It's been hit, failed accumulation. The next time we touch that, expect all hell to break loose. Little reminder for the future. Yeah, there it is again. Same level, same purpose. Thank you. All right. Anything anyone else wants to look at while we're here? Market targets. Might as well put the Karen's chart. Not so long. Oh, that thing. Okay, so bear market targets for BTC, they would be pretty easy to find, I'd say. What do we want? Like a 3-month? The EEK trend. See, that's what happens when you hit the EEK trend. What we got here? That'd be a good one. So untested 3-month range trend, hard close broken. Depends when we get to it, but just take a 3-month chart, go from the base of this candle to this candle. Bear market DCA. Dumping. And what else you got? You got prior broken 3-month trend, which is coming through here. That one. So you just take the Jan 21 candle to the top of the 1st July 24 candle. and just see if any of them have any kind of confluence. So you've got this hold level here at 70 something that never got hit. So that's one of these little gaps where price propelled off nothing, leaving behind a reason to actually go back. So if we're in, say, 2026 to 2028, so it makes sense. So you're probably all in, probably in that area there. Okay. What was the name of that token? KDA. Oof. Yeah, okay. Just to put it in perspective though, that's a 3-month hold level. That's below zero. What do you reckon was going to happen? Especially when it closed below there. Let's see. Can we find something else on this? So that was its weekly origin range level there. So from the moment it lost this, you got your little fake pump to the upside to grab all the liquidity, and then it was just downhill. So it ran into wick rejection off the hold level. So, and then when it closed back under it, failed to get back above it, more downhill. Tried to create a level there. That little doji right there, that says goodbye, then reject, dump. So the funny thing is, like, this is where they probably announced that this token was, or that they were going to stop operations or whatever, but that's where it started. It was right there. So the moment that happened like that, rejection, down it goes. Win 200k. I don't know. I mean, this basically is like a 3-month hold level, sending the price to zero because the thing hasn't been around long enough. So if you think about that from the other direction, you've got BTC, which has been around long enough, and this is a 3-month hold level, but the other direction. So now if it comes down and hits this thing, you can send it. So you can kind of see how it can get there one day. 3-month hold level, it could use that to break the trend. Then it's got the reverse trend that's 300 and something. So it's very possible. Just purely based on what sent that other token to zero is the kind of thing that can actually send this to a number that the BTC maxis will be very happy and high-fiving, and a lot of other people will be going, how the hell did that happen? But it does kind of mean you've got to go to 93 or 94 before you even have the chance of doing that. Gold chart. What's the oldest gold chart? Wow. That looks pretty nuts. Well, looks like $5,000, $5,700 and something dollar gold is probably on the cards at some point. Yeah. Ooh, that's where it is now. So it's just sweeping up above. Probably even look at this on a different time scale actually, because it's been around so long. What that was. Imagine if you just caught that range break right there. That one 6-month candle that actually broke out of that range trend and just sent the thing into price discovery. So that July 22. So this could actually come back down and retest this. So if it hard closes up there, retest to the prior trend, or even a gradual move back to support. So that by 2030. Do you reckon by 2030 we've figured out how to make gold? Looks like a double top. ETH. Solid ETH. Oh, that looks nice. Obviously there's a bit of time to go on that, but it could, if that closes, creates a hold level here, then sort of a move from 3,000 up to the backside of that range trend. Could be your final sort of blow off to the upside in a couple of months' time, assuming it holds these sort of levels. Yeah. Oh, that's not good. So from a short-term perspective, if that closes, if that closes the week down here, then expect it to come. Actually, no, don't. Now, if it closes the week here, expect it to come and bounce off that. If it loses that, expect it to come to that. Yep. 4096. That was always kind of that key level for ETH. If it closing above it, great, but then it got stuck in a downtrend and hasn't actually been able to stay above it. So yeah, so a weekly close here is pretty bearish for a bit of a dump because it'll be underneath the range and it will be underneath that very old March high time frame support resistance. And basically it's up to that 3489 level to hold it, and if it doesn't hold it, then it's going to come back down to the base of the range down here. There's all these levels that aren't retested too, so it's kind of like what BTC was before it took that dump down to 102. Just a whole bunch of levels that have been broken and hard closed and never retested. So yeah, ETH should take a dive. One way or another, ETH should take a dive. It's not a sustainable thing for this to be up here without retesting all of this stuff. So if there's FUD about developers leaving and all that kind of stuff going on, then, well, surprise, surprise. Chart says something's going to go wrong. If we break the 180s tonight, probably won't. Hopefully we get 177. Yeah, so if you're trying to find like what levels could support this rejection, which is not technically a hard close yet, so it can just go back up. It would have to be something like this 161 level. And Closing below that is also not good. There's heaps of levels down here that could support it, but they're all much lower. Got range trend, range trend. If this thing really starts to take a dive, you know, like what we saw the other day, then 161 through to 140s and then down to 120s would sort of be the areas that it could recover. And effectively 100 is the bottom of the range. There are some other range trend levels like these. Oh, that's what it just bounced off now. Not quite. So when we were stuck under here, we actually created quite a bit of support just along that 170, 180 area. So you got that one and that one. So the closest support right now for that on the weekly is about 182. So that'd be most bullish place that you could reverse a weekly rejection. Cool. All right. Unless anyone's got any questions, I'm going to sign off and go flick through a whole bunch of charts and see if I can find something worth making some money on. Yes, 3 more subs to 600 and then 400 more to 1,000. Let's get to 1,000. Then what do you want, like 1,500? It's never ending. You're welcome. You're welcome. Easy. All right. Compound. Yep. Okay. Catch everyone later. If I can figure out how to close this. That button. Oh, Q4 prediction. I don't know. Thing with price structure is it's based on closes and timeframes, and you can tell where price will go. You just don't know the when. And so, could it happen in Q4? Like e.g., could we have some ginormous pump in Q4? Maybe. Could we have a big dump? Maybe. I mean, like, all you can really say is say I look at this candle right now is that for the next 5 days, it's just noise. Like, it doesn't really mean anything. But if it closes down like this in 5 days, then I know that maybe a trend will move. And if that happens, then there will be some kind of flow-on effect of that trend moving. Maybe it ends up climbing back up into the support, or flips these back into support, and then you're going to get some kind of bounce. So if you're trying to sort of look ahead at things like what could happen in Q4, you don't really know. You could look at some of the like monthly candles, and you could say that, hey, if a monthly, so let's look at monthly. So you could look at this, and from this, that the monthly has bounced off the range trend. Based on that, we need to be closing the month above 190.7, but preferably, we want to be above the 200.579. We know if we look at the monthly break level up here, we've tested it. Ideally, the next monthly candle needs to make its way at least to 234.026. If that next monthly candle doesn't make it up there, but say doesn't create these resistance levels, then the one after that would reject off that, and it would come back down to hunt something lower down. So we know that if we do make these resistance levels, we're probably going to reject off those. Then the trend has to support us. If we end up diving the trend, then we're going to hit the 120s. So you sort of, all you can really tell is what can happen on the next candle based on how it closes, based on the time frame. So that rejection, if we replay this, so back to, let's just go to here. So we had our break level up there at 200 and something, 243. When we closed under it, it's not the end of the world. The options basically are that the next one closes over it, or it rejects off it. So you've still kind of got those two options. But it's important that it touches it. So now that it's touched it, the options are still the same. We're looking for either a close over that level, or some kind of rejection. It keeps rejecting. Okay, so coming back down to the trend, well, that was just one of the two options. Now, same sort of thing applies. We're looking to see, do we close under the trend, in which case we could get more of a rejection? Do we close above the trend, in which case we could get another bounce? So you get both, basically. And still that level hasn't changed. It's still just a break level. Are we going to hard close it or close over it? We don't know. Back under it. Okay. Back under it. So we're probably going to come back to the trend. Sure enough, we come back to the trend. Okay, and then see, we lose the trend. Create a hold level. Now somewhere in this wick, we're probably going to reject. There we go. Okay, now we're at the bottom of the range. So this is the top of the range. This is the bottom of the range. And now what we need is we need one candle not to touch this, and it becomes the same as this. It's not that one. But it closed back up above it, so we're probably expecting a bounce. Okay. So these are almost equal levels now. Okay, so they're equal levels. So now, if we hit the top first, we're going to reject, and if we hit the bottom first, we're going to pump. So one way or the other. So you kind of know now where you would look at the tops and bottom of your range, and they're more polarized, these levels now. So instead of being kind of like a 50-50 thing, this will create a bounce, this will create a rejection. So it's and we never get to the bottom. There's your rejection. So back to the trend. So we still haven't got to the bottom yet. So all we know really is that how this month closes in relation to this wick is no different to how this month closed in relation to this wick. It's either going to get back up inside here, in which case it's probably going to be able to move up, or it's going to close here, in which case it's going to want to move down. So you could look at it from like 3-month candles or 2-month candles or anything along those lines, or monthly candles, and you get a bit of an idea about what would happen, for the next quarter. As it currently stands, you'd have to say the next quarter is going to have more downside to it. But because this doesn't close for 10 days and basically a candle is just nothing but noise until it closes, if we do get back up above that 200.579, even if it's on the last day of the month, if you get back up above that, then the chances are that you're actually going up, not down. And if we touch this level here, this 2 something or other level, what we say it was, 234, if we touch that in the next monthly candle, we don't polarize it like we did this top level, so therefore it's not going to reject on the next touch. If we close up over the 243 level, well, it's a polarized level. If you close over a polarized level, you just moon and you go into price discovery. So that's kind of the gist of how far ahead you can see based on timeframes. And so the idea of looking at all the different timeframes is that some of them are really big, and they'll give you an idea of the scope of which the price can move in. And so if someone says, is it safe to have a liquidation level at 150? Well, no, it's absolutely not, because as it currently stands, you're at 243 was a polarized level rejected. It's created another break level. We've rejected off that. We could polarize this level by not getting back to it, reject off it again, or we could even create a hold level here and reject off that. And if this trend doesn't hold, because it's been created and it's supported the price once, if the next candle comes down, bounces off it, it could come back and we could go off to the moon. But if the next candle comes down here and just sits here and festers sideways, and when that happens, people open their longs and people open their shorts, then it opens underneath the trend, and then it goes, well, where's the next trend? Well, the next trend's all the way down here. So now you're heading down to the 120s to the 100 area to find the next trends. So yeah, that's all you can really do. See that one little bit ahead. Anyway, hope that helps. And yeah, catch you again. Bye.